right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Yeshwanth, much love to you. Thank you for tuning in from India. It's great to see you in here as always. Crypto Wanderer 5813, much love to you, man. What's up, everyone? No tax on the like button. Yes, please, guys, hit the like button on your way in. Please do hit the like button if you get any sort of insight into the market from this live stream. And just thank you all for your support. Thank you all for being here. I appreciate each and every one of you. Lil Rick 69, what's up, man? It's good to see you as always. R Pink, much love to you, man. Thank you for being here. Thank you for modding, and thank you for always doing such a great job with it. Yes, and thank you for the support with the like button as well. Illuministic, what's up, man? Good to see you. Travi Trades, Senior Traversa. Tis the most wonderful time of year. Yeah, guys, we're coming to some major support levels, and actually, I am getting excited for that swing long opportunity. And it's looking, well, money flow looks really bad. Let me say that, but we are seeing potential bull divs form on some high time frames, so it could be really good. I am still looking for this fifth and final wave on the daily time frame. This from the rejection from 67.3. I'm still looking for one more low to be made in fifth wave. I'll cover that in just a second. No, much love to you. Been a good trading day for once. Awesome, man. Good, glad to hear. Michael Mitzal, good evening to you. Thank you for joining. You, good afternoon, new to the chat, but longtime subscriber. Well, you, thank you for being in the chat. Thank you for joining the community. Thank you for joining the conversation. Appreciate the support, my man. Hunt Like a Wolf, greatest TA around. Well, thank you, Hunt Like a Wolf. That's a really kind compliment. I appreciate it. I do my best here for you guys. And yeah, let's just keep rocking it, keep trading the charts, and keep scraping money away from these market makers and building our portfolios, building that wealth over time. Time Attack, much love to you. Thank you for always being here. Thank you for modding as well. Thank you for smashing the like button. I appreciate you guys. Yeah, I'm looking, I'm looking for a long. I'm not quite in a long yet. I let you guys know that I did not enter a long yet, but we did tap the bottom of the pitchfork. Finally tap the bottom of the pitchfork again. And more importantly, on our multi-cycle pitchfork, we are now tapping the bottom after seeing a absolutely to the dollar perfect rejection from our pitchfork band. We have now rotated down to tap the bottom of the pitchfork. I'll cover this as well in the stream. Very important support level that if lost on a weekly close, if lost, we could see some major continuation to the downside. Now, if we close the weekly candle below this week and then get right back in it next week, that could be acceptable too, because we could form a bit of a range down in that low to mid 50s area. And overall, we're looking at a bigger distribution in here, or even a distribution, or excuse me, accumulation in here, right? We need some sort of accumulation in here, which could form into a bigger accumulation over the next couple of months. But yes, looking pretty good. Sudeep, much love to you. Thank you for being here, and thank you for modding. Machi HK, the Bear Lord is here. Machi, did you catch any of this short position today or since Monday? I did end up shorting on Monday, which was this lower high golden pocket right in here. I shorted right up at that lower high golden pocket. And remember, guys, I posted about that in the Telegram before we hit the short, and I posted about it in the Telegram right after I took the short. I let you guys know. But I was looking at that short based on being the bearish backtest of our ascending channel, and it was our local golden pocket. So it's been a really nice short trade, this bearish backtest of the ascending channel. Also, if you pull your Fibonacci golden pocket, that very key psychological level, guys, that we all know and love, you can see golden pocket, boom, rejection, perfect rejection, and since then it's been down. Stefan Dingus, welcome in. Way Neurosi, hi from Cape Town, South Africa. Well, welcome in from South Africa. Thank you for joining. Ryan Henson, good afternoon to you. Jose Celero, good afternoon, man. Blessings to you as well. I added to the SFP today and yesterday. Okay. You added to SFP long, are you talking about, or a short on an SFP? You might be looking at lower time frame stuff, but let me go ahead and get into the charts, guys. So overall, on the higher time frames, we've been looking for a fifth wave to the downside from our rejection at 67.3K. Now, I admit that at the beginning of the week, I was looking at this first dump down as more of a double zigzag dump to the downside, even though it looked a bit impulsive. It did look a bit impulsive, but there was a lot of choppy overlap in there. But there is a valid way to count this push down as a motive wave, as an impulse, an expanding diagonal, which is probably the rarest impulse you get. We got our corrective move up to our lower high golden pocket. I just showed you guys that, which was also the back test of this channel. Remember, these corrective moves form a three-wave zigzag, and it's often in an ascending channel. Just like this here was a three-wave corrective move in an ascending channel, and we rejected 83K in that ascending channel when we hit the top of that channel. So we've been expecting this to push down to break to new lows below our $59,000 lows. And we did that yesterday, but we've even made new lows again today below that, like actual real lows, not just a micro SFP. We've finally hit the bottom of our pitchfork. Now, this pitchfork I pulled from the very important all-time highs at the beginning of the year. So our first all-time high in 2025 at the beginning of this range, down to your 74K lows, up to your current all-time high. And this pitchfork has been really well respected for the most part. I mean, we did have some chop in this range through the midline, but it's been really well respected. You know, you can see that upper band, you know, support, resistance, drop through the midline, chop a little bit. Once we lost the midline, resistance, break above it, flip it to support. Then we work our way up to the midline. The midline rejects us perfectly. We were looking for the swing short. By the way, guys, we were looking for the swing short to take out our 60K lows up in this purple box. We've been looking for that ahead of time, not hindsight analysis. And then we dump. And now, so we're looking at this move down from $83,000 as our final kind of push to the downside, or at least, I don't want to say our final push, but at least a push to create a decent size retracement, even if it's only going to be up to like the POC of this range, or if it's going to be up to like the value area high, or even taking out the range highs at 83K. But if we pull that volume profile over, you know, that POC, I guess it's still at around 67K. I would say the value area high is more what I would be looking for. And there's a reason why as well, because we're finally hitting the bottom of the pitchfork. We do have some potential daily bullish divergences on the chart. Money flow looks horrible. And the bearish money flow is always going to overpower a single drive of bull divs. And this bull divs is not even confirmed yet. We haven't rolled over. So that's why I'm expecting that we could make some new local lows. We also have not hit the naked monthly point of control yet, which is at the start of that green box. You can see the naked monthly 57,890, I'm going to say. And then we have a couple, you know, daily levels. We did hit a daily level today at 58,209. That's kind of where we bounced this morning on that 58,209 and the bottom of the pitchfork. And then, of course, the naked weekly is at the same level as the naked monthly. And then the value area low of our 2-year long range is going to be at $56,000. I showed you guys that in yesterday's video. Actually, you can see it right here. Value area low of combining 2024's fair value, its balance zone, right? In 2024, the fair value of Bitcoin was between $70,000 and $60,000, with the point of control being around 63. Then we pushed up into new levels of price discovery in 2025. We made another range up here in 2025. That was between 110,000 and I believe it was like $85,000, with our with our point of control being around 96,000, 97,000. And when we lost that range with a high amount of volume and fell back into your 2024 range, now you can combine the two ranges together, and it gives you kind of your fair value zone for Bitcoin, its balance zone over the last 2 years. And so you can see that the value area low is what we're coming down to. We did reject after losing, you can see here in this last impulse from $83,000, after losing the value area, or excuse me, the point of control, we came up to bearishly backtest it, and we rejected very strongly and very harshly on a bearish backtest of the POC. So in terms of volume profile, we should be expecting a rotation down to value area low, or in a zone, you know, very close to value area low, or actually hitting value area low, which is between like $58,000 and $56,000, with the value area low actually being pretty much right at $56,000. Now, we also hit the bottom of the pitchfork. Now, this has been a bearish pitchfork that has kind of guided us through this entire bear market so far. The bottoms of pitchforks are very important support levels. You can see that the last time, let me go ahead and hide this volume profile. The last time we hit the bottom of the pitchfork, we did get a very nice reaction. Yes, there was a big wick past it. It was a liquidation cascade that was happening, but it held, and then we got a very aggressive pump to the upside. Really, let's just do something like this from the bottom of the pitchfork. We got almost a 32% push to the upside from that body candle close on the daily time frame. Now, could we wick down below on the weekly time frame to hit $56,000, but close our weekly candle body at or above the pitchfork bottom? Yes, I do think that is possible. Actually, I think that's probable based off of our money flow that we're seeing. But because we're finally now hitting the bottom of the pitchfork, we are forming potential accumulation at the bottom of the pitchfork. We could see a move up. We could see that kind of left shoulder, head, right shoulder after rejecting at first, maybe from your pitchfork band. We could see a move up to like $77,500 where our macro 786, it's actually, I have to re-pull that now because we made new lows today. So let's just delete that. We'll go from the highs at 82.8 down to our brand new lows that we just made today. I just want to check to make sure that is not more than 30%. It's pretty much right at 30% now, guys. So what I'm going to do is I'm going to take this this Fibonacci golden pocket 786 and I'm going to put it based off log scale. And you can see that we do have, man, yeah, I guess it does align more nicely with the non-log scale version with our pitchfork midline. But we also can assume that this is going to take some time. So let me go ahead and pull this over a little bit. And you can see here what we often form at the bottom of pitchforks. So first off, I'm looking at two forms of accumulation. I'm looking at a mini accumulation forming in here over the next couple of months. But for the kind of the bear market bottom, this is only a possibility. We could get a much worse bear market. But if this bearish pitchfork is going to hold, we could be looking at this as some sort of accumulation that occurs maybe all the way through, Q4. Right? So we would have on the macro accumulation, we would have this being our tap one at $60,000. This entire mini accumulation, we would expect something like this, boom, higher low, maybe come up, reject, come back down, and we would see this entire little accumulation zone being our tap two, like a daily accumulation. And then we would see, after maybe rejecting from 77, a move down to golden pocket. This could be our tap three, but overall, this entire sideways range here could be your accumulation for the bull market. Now, I understand that's kind of projecting a very far into the future, and this thing could break down, and we could see Bitcoin drop into the low 40s, high 30s. But for now, I am going to be paying attention to kind of this range in here, this structure, because what we want to see at the bottom of these pitchforks is that accumulation forming. We want to see kind of this range, this sideways range form. We want to see the bull dips forming on the chart. We want to see that money flow curving up. And if we do get that, we might be able to break this up and see expansion up to $77,000. And then from there, it's going to be a big test. If we can get above that, we would say, hey, maybe this is it. Or if we're going to, crash back down, we would be looking for a lower high, depending on, probably value area low. You would pull your volume profile of this range. We would look for important confluences within that range. But it is starting to look pretty good here, guys. Starting to look pretty good. I want to talk about this move to the downside that we've been talking about since we rejected from $67,300. And if we zoom in here onto, let's just go to the 2-hour time frame. So this move down does look pretty aggressive, but there's a lot of choppy overlap. But like I said, there is a way to count an expanding diagonal motive wave to the downside there. Then we got our corrective move up to the golden pocket. We rejected the golden pocket. And then really since Monday, we've been rejecting and dumping all week long. Now, we were looking initially at this being, and if you watch yesterday's video, I talked about how a 1, 2, a third wave. Now, our third wave did come to the 1.236. It didn't quite hit the 1.618, which I was a bit concerned about, but we wanted to see a 3-wave corrective move before seeing another low. I will say this, we have invalidated based off of the Fibonacci golden pocket from the highs of wave 3 to the lows of wave 3. we have hit that golden pocket. So now that invalidates this move up as a wave 4. Another invalidation, which is actually the hard Elliott rule in Elliott wave theory, is we have overlap between the lows of wave 2 and the highs of wave 4. It's like an exact rejection. You can see it's an exact rejection, but there is overlap there. There is overlap. So we cannot now no longer count this move down as an impulse. Or you could say, you would have to say it's a contracting diagonal, right? Because you are allowed to have overlap in a contracting diagonal. That's what a contracting diagonal is. But we would have to say again, guys, that this is some sort of expanding diagonal, because if we are looking at something like this, okay, we're there, but you would see from this low, we're actually like expanding out here. And that's and we had an expanding diagonal here. So to see 2 expanding diagonals in a row is extremely, extremely rare. I don't know if I've ever seen an instance of that ever on the chart. So now we could say, okay, very low likely probability that this is a 1, 2, 3. We're going to get a bounce 4 and then a 5, an impulse to the downside. So now we have to say, okay, because of that, maybe this range is going to last longer, and this 4th wave is not done here. We are going to have to move it over, and we're going to see a longer range in a wave 4 before making a wave 5, which would also correlate very, very nicely, guys, with some sort of accumulation in here. Even if it's a Model 1 accumulation. In a Model 1 accumulation, it's like you get that descending channel, and you're getting that choppy overlap where you do make another new low in your tap 3. You'll make another new low, but it also creates those nice bull dips. You're getting the lower lows on the price action, and you're generally getting those higher lows on the momentum waves. So maybe we could be looking at some sort of Model 1 accumulation here, and in some ways we can use our pitchfork levels as that parallel channel, right? We can use these pitchfork levels as the parallel channel guide. Another thing that we could even do is you can pull your parallel channel from the lows at 59K. Oop, it would help if I grab that. From those lows at 59K, we'll just throw it sideways, and then we'll throw it up to the top. You can see this is our sideways range that is developing here. Actually, we're coming down right now. We rejected VWAP, guys, and earlier today in the Telegram, I let you guys know if we do reject VWAP again, we could make another new low. And look at what's happening here. You get that initial nice push up, reject VWAP, and now it looks like we're forming some sort of triangle in here that could break down, because a triangle is a consolidation continuation pattern. And honestly, we dumped coming into it, so there's a higher probability that we dump coming out of it. Let's see, I would probably pull it something like this. Some sort of triangle that's forming after the dump occurred. Let's see if we can hold the bottom of this channel right now. It's pretty much your lows from $59,000, these lows in here. But yeah, and once again, guys, we just keep printing. Look at hidden bear div, hidden bear div, hidden bear div. We just keep making these lower highs with hidden bear divs, which are continuation patterns. If we look at our money flow is bearish on like almost every time frame. 15-minute, it's leaving into the red again. 1 hour, it's starting to curl over on Market Cipher B, and it's already starting to curve down on NAMI. Now, I will say this, on the 1 hour chart, Market Cipher is starting to develop some really nice bull dips. You can see from Tuesday's low to Wednesday's low to today's Thursday's low, we have 3 drives of bull div, and then your money flow is now starting to curve to the upside. But getting back to this last kind of price action from Wednesday's dump. So we dumped on Wednesday, we dumped today. What we now have to look at in here, because it's very rare that we're going to see some sort of expanding diagonal on top of an expanding diagonal. I'm going to be looking at a bigger sort of flat correction that could be occurring in a wave. Well, we would have to say this is part of a wave that's still part of the wave 3, but we're seeing some sort of expansion. And actually, I don't even really like that, guys, because generally wave 3s are your longest, most explosive waves, to most volume-filled waves to the downside. What I would be looking at when it gets really confusing with Elliott waves like this, and when there's a lot of choppy overlap and a lot of, non-respect as far as the highs and the lows, as far as impulsive moves go, we can just simplify it. Okay, there's choppy overlap in here, so we cannot with high probability say that this is an impulse to the downside. So if this is a corrective move to the downside, it could be part of a larger corrective move in that, once again, W, X, and then a Y, and then maybe this is some sort of ABC with a contracting diagonal to end it in your C wave. But then we would be looking for, because if this is the WXY, a flat correction, I actually think I had that on the chart from earlier this week. Yeah, WXY, which our X actually ended up being a flat, right? We took out the lows, so our X ended up being a flat. We would look for still a push up in a Y wave, and we would look for us to take out the highs of W. Now, that it doesn't, because we've surpassed the 0.7 Fibonacci on this retracement, so from the low at 59 to the high at 67.2, because we've passed the 0.7 Fibonacci, there is a greater probability, not guaranteed, but a greater probability that this is going to end in a not taking out the highs of W. But the better probability is that it will take out the highs of W. And we're going to see that flat correction come in here. We talked about that actually last week. And after taking out those highs of W, we actually have some nice resistance up here too with our POC and our pitchfork band. We could see that rejection back down to create that fifth and final wave. And that would also work really nice in terms of the accumulation as well. Let me hide this parallel channel. In terms of the accumulation, and we'd be looking at, therefore, a model 1, a tap 1, a tap 2, and then a tap 3. You get that model 1 accumulation, the next low making another drive of bull divs into macro support, and then we could see a nice big expansion wave to the upside. All right, let me check the chat here. Mark Dutch, much love to you, man. Welcome in. It's good to see you, Mark. Hope your travels are going well. Okay, let's see. Where was I here? Lots of liquidity above us, just buying spots, still no leverage. Yeah, guys, I think this is the area where I am starting to dollar cost average in on spot. I had a spot limit order sitting right on top of that naked monthly point of control. So if we move up from here, I'm going to be very, very sad that my naked monthly probably didn't fill. My order at the naked monthly. If we look at where was the actual low put in today, it was put in $58,000 on the dot, guys. On the dot. We probably had a lot of major limit orders setting at $58,000. But that's actually eerie right there, even by since $58,000 on the dot, at least on the Coinbase chart. I want to look at the liquidity. Speaking of that liquidity, let's go to the past month of price action. We're pretty much looking at that range from the lows at $59,000. Man, yeah, so once again, you guys can see the liquidity. The major liquidity is above those $67,300 highs, just above those highs. Now, the target for a flat, if we're looking at this entire sideways structure for the past 3.5 weeks to a month, being some sort of flat in here, right? A, B, C, or I mean WXY. We would have to say WXY because this is a 3-wave zigzag. 3-wave zigzag, 3-wave zigzag, and then we would look for another 3-wave zigzag to the upside. That's what a complex WXY correction is. In an ABC correction, you get an impulse in an A wave, you get a 3-wave move in a B wave to usually rejects from golden pocket, and then you get another impulse in a C wave, and that makes an ABC. Now, a WXY is pretty much the same sort of structure, WXY, but instead of seeing an impulse here, instead of seeing an 1, 2, 3, 4, 5, you're looking for a 3-wave move. And then you're also looking for a 3-wave move here. And then in the Y wave, you're still looking for a 3-wave move. Now, this is where it gets a bit confusing. Within this 3-wave move in Y, it could be an A, B, C. So therefore, you're looking for an impulse in your A wave, and you're looking for an impulse in your C wave. So you will still have impulsive structures in the overall larger correction, but it doesn't mean that, it doesn't mean the whole thing is going to be an impulse, right? 1, 2, 3, 4, 5. We're not looking for it like that. And if we do see a 1, 2, 3, 4, 5, we could say, hey, we have to reorganize this, and we're maybe the low is in. We got to see what's going to happen. We're not quite there yet, guys. We don't have the data. We're still working on this X wave to the downside. Now, if we do pull a Fibonacci expansion target from the highs at 67.3 to the lows that we made today, and we go to our flat targets between the 1.236 and the 1.382, we could push up to around, you know, $69,000, $70,000 or 69 to like 71,000, close to 71,000. But the overall main target is just to take out your W wave highs. And look at how nice it would be, guys, if we kind of maybe one more very, very small low here to hit that naked monthly. Then we get that 3-wave corrective move up to hit the top of the pitchfork band at your POC, showing that overall flat. Then we get one more dump, maybe to hit the value area low at 56,000, and that's going to give you the Model 1 accumulation. But also think in terms of pitchfork trading. If we hold the bottom of the pitchfork, we have a high likelihood of at least testing the lower limit of the lower band or the upper limit of the lower band. Now, if we reject from either one of those, you would expect to come back down again and see another test of that. If you, well, actually, it doesn't necessarily mean that. We could reject from it and then hit golden pocket, like take this internal liquidity and then continue up. But if we break above that pitchfork band, we are expecting a move up to the midline. And this could take some time. I suspect it will take some time because we're looking at, you know, like high time frame moves. Right now on the 4-hour chart, just this move alone would take, you know, 2-3 weeks to play out. But it does make sense in terms of time, right? The time it would take for us to end this bear market. We're looking at Q4 of 2026. Okay, let me check the chat here. I just got a little bit off track there. 21 likes, 55 viewers. Yes, guys, please do hit the like button for me. Please subscribe to the channel. I want to go in on the low time frames real quick because I am starting to look for some potential long opportunities. Man, I just don't like, okay, if we look on the 5-minute chart, you can see once again, we keep getting 3-wave corrective moves to the upside. So we had our low that was put in today, and you can see this move up is very clearly a 3-wave corrective move, and we rejected from the VWAP. So the higher likelihood, because this was a 3-wave corrective move and we're rejecting from VWAP, is that we are, yes, we might be in some consolidation right now, a triangle, but the higher likelihood is to come down and make another new low. But what I'm going to do now is, because we do have these very important lows exactly at $58,000, we have a perfect SFP level right below that. The SFP of this low into our naked monthly point of control would be literally, guys, like the perfect trade setup if we get that to play out. Another thing that we can look at, I want to zoom out to the 8-hour chart and look at where this anchored VWAP is. Now, this is on the Coinbase chart, but you can see our anchored VWAP is pretty much right on top of our naked monthly point of control. Right there. I mean, just a smidgen higher, right? 57.88. Actually, our naked monthly point of control, this box should be a little bit higher. I just had to mark it out a little bit better. So yeah, look at that. Right where your naked monthly point of control is, that anchored VWAP is coming in. And we have barely front run that. So to come down and make one more low, to SFP this low into that naked monthly, stop out all the early longers, and then get that big push to the upside. I mean, it's just looking fantastic for me right now to see that happen. And yeah, I'm going to be watching that very, very closely today if we do break this down. Now, if we break above the anchor or the VWAP, the regular VWAP, then we might get a push up to at least take out the highs from yesterday. We might be looking to get a move up, and we can actually even pull a golden pocket from the rejection of yesterday's highs to the lows that we made today. Golden pocket. Okay, golden pocket is going to be 61.2 to 61.3-ish. Actually, I would be pulling it from this entire impulse down here because we're looking at, or this entire dump. I don't want to call it an impulse. We had a dump, correction, and then dump really. So we would want to pull it from the highs of Monday. Yeah, that does make pretty good sense because your anchored VWAP is going to be there. And then if we look at our volume profile of this last 3 weeks. Dang. All right. Not good confluence there. 786 is also not good confluence. All right. Do we have any naked monthly points of control or naked dailies? We have some a bit above us, but we'll talk about that if we can break above this golden pocket. Uh, 63.1. So you're looking at 63.1 up here. Yeah, 63.1 is where that, 62.8 to about 63.1. We taking this liquidity up there would be really nice. And I don't know if you're on a different exchange, but on Coinbase, that high is at 63.156. Right into this golden pocket pretty much. So yeah, that is a nice area I'd be looking for another potential rejection. But if we do that, remember, what is king, guys? Market structure is king. And even on the 1 hour chart, this entire week, we've been making lower lows, lower highs, lower lows, lower highs, lower lows. So and until we break market structure bullishly, even on the 1 hour, we can't really get too aggressive with our long positions yet. We want to wait for a bearish market structure or a bullish market structure break. So we would want to see maybe this breakdown, then see an impulse up here. You'd want to see a 5-wave move up here. We would want to take out this high. As soon as we take out that high, now if you catch the SFP, great. Take some profit if you take out that high, or not financial advice. I'm not a financial advisor, but this is what I would do. Then I would want to look for that 3-wave corrective move down to the golden pocket. Now, if you long the SFP, you're already in a long. You took some profit up here. This is where I would compound the crap out of that long position because you broke market structure bullishly. And then you would see maybe that 3rd wave come in, right? A wave 1, wave 2, wave 3, 4, and then a 5, something like that, where you get that big push up. Or actually, you would be looking at a smaller impulse because we're looking for, 1, 2, 3, 4, 5. You'd be looking for a 3-wave move and then another 5 to create the ABC. All right. Nice. I got that one today. Good stuff. Awesome, Eric. It's good to see you as well, Eric. Dylan, good to see you. Let it rain. Well, here's the thing, guys. On the money flow, this is a bit scary here because look at on the 4 hour, money flow is still leaving aggressively. We're printing hidden bear divs on the 4 hour chart as well. Money flow is starting to leave again. And then on the 4 hour chart, you did have some bull divs on NAMI, but that only gave you this move up yesterday after the stream ended. And then if we print another hidden bear div, actually we didn't print it, but we've made a new low, so that already confirms we could form another drive of bull divs on NAMI. It's not confirmed yet, at least not on the 4 hour. And also that would give us, we do have maybe some bull divs on Market Cipher, but it's not confirmed yet. But even so, bearish money flow is going to overpower that. The big concern is on the daily time frame. Look at how bearish this money flow is on the daily time frame. I mean, guys, not looking good here. Aggressively leaving. Also, your momentum wave still has a lot of momentum. That's kind of what this light blue curve is on the edge of Market Cipher. The wider it is, the more the momentum wave has momentum to continue going down. So it's looking like, continuation down, unfortunately. And personally, I would like to see that next low being made. I would like to hit that naked monthly point of control. Jose, how probable do you see a black swan for Michael Saylor? Honestly, man, I give it a decent probability. Maybe not 50-50, but I would give it at least like a 35% probability. And if that's the case, actually, let me go to my, let me turn off these naked monthlies first. Let me go to my Binance chart because we'll cover that multi-cycle pitchfork. And guys, this multi-cycle pitchfork on Binance has been so good to us this entire bull market. But we're hitting the bottom. And let me just zoom out to the weekly chart. We're finally hitting the bottom of the pitchfork in the entire bull market. We're hitting the bottom of the pitchfork after seeing a perfect rejection from that lower band, after our all-time high rejected us from the midline. So if we start to break this bullish pitchfork to the downside, you could drop easily down to 42K, easily down to 42K, and maybe even down to that 39K or even $34,000. Once again, the most important support on the chart, if we take a Fibonacci golden pocket from the bear market lows to our all-time high, and we put that based off log scale, right? Because that's more than a 100% pump to the upside. Our proper golden pocket, our proper psychological 61.8% retracement is around $34,500 to $32,300. It also happens to be the most important historical support resistance flip on the chart. Support, resistance, resistance. So coming down into that zone, I mean, super important, right? I don't want to go there yet. We have to lose. First off, I'm not even thinking about that until we start to close weekly candles below this pitchfork. If we close a weekly candle below this pitchfork, that is when I'm going to start getting a bit more bearish, guys. And we could do something like the next weekly candle or even this weekly candle closes below and then we get right back inside. Actually, that would be hyper bullish to me. If we get right back inside and back test it, I'm going to be looking for swing longs because we might be able to even see a long up to like the value area high of this range that's forming. Unfortunately, we do kind of have that proverbial topping pattern, right? If you're looking at this as kind of like a left shoulder, this whole structure up here is a head, and then this is your right shoulder. If you break this down, you could see that big breakdown of a head and shoulders, break all the way down to $30,000. The other thing is look at our money flow on the weekly time frame. It is now crossed back into the red again. So we want to see that start to bottom out on the weekly time frame. If I pull up Market Cipher full screen here, it is still leaving. But we do have the potential for bull divs on the weekly time frame. It's not confirmed yet, but as of right now, bull divs forming if we can hold the bottom of this pitchfork, and even if we're going to chop down and around here for a bit, right? Sometimes you wick up past these pitchfork levels, wick down a little bit past these pitchfork levels, or you see some sort of, this is a perfect example actually, right in this area here. This was at the beginning of 2025. We broke above our pitchfork midline, and let me just zoom in on the daily time frame to that because this is super important. Coming over here to the beginning of 2025, you can see that we rejected in 2024 the pitchfork midline, and we dropped all the way to the lower band, but we broke above it. And in this area right here, if you go back on my channel and watch, I made a video called Wyckoff accumulation distribution, and I talked about, because a lot of traders, even highly respected traders that I love and respect fully, were talking about this being some sort of reaccumulation where we were going to spring and shoot up here. And I said, based off of Market Cipher, having bear divs, multiple drives of bear div formed, and money flow draining out as the range was forming, I was looking for distribution up here, a distribution range to distribute down and break to the downside. Well, let's flip it, guys. We're at the bottom now with the same kind of bull divs. We're at the bottom of the pitchfork with the same kind of bull divs. So we could be looking for the same sort of pattern, but in reverse. We could be looking for an accumulation range in here with bull divs on the chart. The only thing we have against this right now is money flows not coming up as the range is forming. So we need to see this money flow start to curve to the upside. But if we range here for, 2-3 weeks near the bottom of this pitchfork, and then our money flow starts to curve up here and starts slowly curving up as the range is forming, we could be looking for some sort of accumulation that could break us up. If the money flow keeps dumping on us, we're going to break this down eventually, and then that's when we can see capitulation happen. And a lot of people think that capitulation's already happened, and in some sense it has, but we could see true capitulation, guys. Like this, from the all-time high, I would say this week was definitely a capitulation week. A couple weeks ago we saw capitulation, but we could see another big capitulation down into the low 40s, which happens to be where your Binance anchored VWAP is. A lot of the other charts, Coinbase, the anchored VWAP is pretty much where we're at right now. The index chart, which I like, we're hitting the anchored VWAP. If we look at Bybit, we're below the anchored VWAP. Sorry, I just wanted to clean that up. Yeah, we're below the anchored VWAP. That is going to be coming in around $68,000, 68.1, 68.2. And yeah, we were looking for a rejection from here, guys. Last week, we were looking for that 3-wave zigzag move right up into the top of the channel. We were looking for a rejection to take out these lows. Okay, we are also below the multi-year pitchfork from 2020 lows. Well, mildly gorgeous, at least on mine, on Binance, on my pitchfork, we're not. And you might have a different style pitchfork. Let's see here. So the multi-cycle pitchfork, I don't know how you have yours pulled, but mine is from the COVID 2020 lows up to the 65K highs. Now, that's important because it was the highs as far as money flow and volume goes. Yes, we did top out at 69 here, but the 65K was as far as the actual, volume of the cycle. It was that was the all-time high, and then down to the bear market lows. And I believe, I haven't checked, let's see, this is going to be a skiff pitchfork. So maybe you have a modified, yeah, just the modified doesn't fit near as well. You want to see when you're pulling a pitchfork, the more it's been respected in the past, the more it's likely to be respected in the future. So this one definitely fits far better. Now, I do have another pitchfork on the chart. Let's see, this is a bearish pitchfork. Yeah, see, look at the nice intersection, guys, between the bottom of the two macro pitchforks. Our bearish pitchfork for this cycle, which is what I've been showing you on the Coinbase chart, and our bullish pitchfork for the multi-cycle. We're coming down to such key support right now. Like, this is why I'm starting to get bullish here, is we need, this needs to hold. The bears or the bulls need to kick in now. And guess what, guys? It's usually best to long when the rest of the world and the rest of the market thinks crypto's going to zero, right? You want to go against that fear that's in the market right now. So just very, very nice right there, man. Very nice. Yep, Mark, it's great to see you, man. Hope the traveling is going well. All right, what's my bottom target? Well, that's very hard, Fistcrest. But I really genuinely do think that we could be coming near a bottom soon between maybe around $56,000 here. If we start to break down below that, I think we could come down, man, maybe even that 42K. I would hate to say that, 43, 42K. Okay. Wave 3 from 5th is in progress. Yeah, I think I know what you mean by that. Boom, or who said that? Kaiku Cray Razor. I think I know what you're saying about this being a 1, 2, 3 in progress, and then we need a 4 and a 5. But the only thing I don't like about that is this push down from Monday. There is a lot of choppy overlap. So if it's going to be a motive wave, because remember, if it's a third wave, it has to be some sort of motive wave. And if we zoom in on that structure, that's pretty much the rejection from Monday, right? So if we zoom in on that structure from Monday, okay, 1, 2, 3, 4, 5. Yes, it would have to be an expanding diagonal because you do have overlap between the lows of 1 and the highs of 4. You've also hit your golden pocket of your wave 4, your wave 3 golden pocket of the wave 4. So the only sort of motive wave that would work in here is some sort of expanding diagonal. And with us seeing an expanding diagonal in here as well, guys, that's very, very rare. I mean, could it happen? Sure. We've been seeing a lot of contracting and expanding diagonals on Bitcoin lately that has been honestly, a bit unusual. But we're seeing it. And sometimes the less likely scenario does play out. Jesus Save 77, much love to you, man, and God bless you as well. I hope you're doing well. Can you raise your audio? Yes, I can raise the audio. Check, 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 check. Is that good, guys? Does the audio sound better now? Let me know. Oh, wait, can you raise your audio so that when ads come? Yeah, let me know, John. Is that better for the audio? 3 up, 3 down. Wait, 3 up, 3 down, 5 up. 3 up, 3 down, and then 5 up. Not exactly sure what you're talking about there. DXB trading. All right, I just want to look at what's happening here. And let's look at our order flow again, guys. Order flow, once again, on the dump today. Very, very aggressive dump. Short positions coming in, and a majority of those short positions were fresh short positions that were coming in. Now, we did have some news this morning. We had, what was it? It was core PCE and final GDP quarter over quarter. But it didn't look too bad. Look at GDP beat numbers, or beat expectations, and core PCE met expectations. So I don't know why there was such an aggressive dump. Maybe there was another news-related thing that caused that. But we did see the aggressive dump this morning. And let's look at our volume. Volume is very, very important to pay attention to. So I just want to go to the hour chart. And if we turn on our volume, volume is still high on these dumps to the downside. Yesterday, dump to the downside, massive increase in volume. The move up that we saw was a 3-wave corrective move up, volume getting lower and lower and lower. And I pointed this out in yesterday's video. Huge dump to the downside, big spike in volume again. We're moving up right now, or we're moving in a triangle right now, volume getting lower and lower and lower, meaning another corrective move, meaning we do have another probability of continuing down here locally. So I have not taken a long position. Actually, once I saw a double rejection from the VWAP earlier today, I was like, okay, we rejected VWAP here, rejected VWAP here. Like, not a good sign, guys. It looks like this is about to roll over and come back down again. I'm hoping that it does, actually. I want to hit that naked monthly point of control. I want to hit that anchored VWAP. And I will be looking for the long position. And honestly, guys, it's very, very rare that I set limit orders on trades. And I'm not, first of all, I'm not a financial advisor. I don't give financial advice. So if you are going to set a limit order on that naked monthly point of control, make sure you're managing your risk. And in my case, if I'm going to set that limit order, I'm going to do it. I'm going to have to use a lower position size at first, but I'm thinking about setting a limit order on $57,900. Longing that, my stop would go below the $56,000 value area low. But overall, I'm going to be targeting at least the POC of the range. So that's already a 4.4 risk to reward ratio. But let's say we SFP that, my limit order gets triggered, and I got in on a smaller position size because my stop loss is way down here. Once we start to break market structure bullishly and then see a retrace, I'm going to massively add to that long position. And then I will also move my stop loss to below where that SFP goes. And then all of a sudden, you have a nice swing long position that you built up. So I am looking at building up these big swing long positions. And if you guys want to stay updated on what I'm doing on that swing long, join the Telegram. And actually, speaking of that, let me cover the partners of the channel real quick. So the main partner of the channel is BYDFI. They're a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you'll get a minimum of 20% discounts on the trading fees. And you can actually earn up to 40% discounts on trading fees if you deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses. That is just from trading on the USDT contracts futures market. You can earn up to $8,100 extra. And that is not only on Bitcoin, it's on the altcoins as well. They are offering some of the best initial deposit bonuses in the entire industry. So if you deposit $100, you can get $50 bonus, which is double what most exchanges will give you on a $100 deposit. They're giving you 20% deposit bonuses up to the $1,000 deposit, and they're giving you 10% deposit bonuses up to $20,000 deposit, which is also double what most exchanges will give you. Most exchanges will give you 10,000 for 1,000, but they won't give you 20 to get 2. So if you're interested, you can sign up with them. Links are in the description below. You do need to KYC level 1 in order to get these initial deposit bonuses, but they are there. I've also partnered with BYDFI to create that Telegram community where I try to keep you guys updated throughout the day, not only on Bitcoin, but on the altcoins that we set alerts on during these live streams, on the trade setups that I'm looking at on different coins, and gold, silver, you know, those things like that. If you're interested in joining that Telegram, it's a private community, but it's free. All you need to do is join BYDFI using my affiliate link in the description and deposit a minimum deposit of $100 or more. You can deposit more if you want to get some of the bigger bonuses, but a minimum deposit of $100. Once you've done that, you click the Telegram link in the description of the video, and in that Telegram verify channel, you're going to type in /verify and then your BYDFI user ID, and that'll get you into the Telegram. /verify your user ID. Okay, second partner of the channel is another non-KYC exchange. It is Blowfin, and Blowfin is offering VIP 1 for 30 days. Let me pull this over. VIP 1 for 30 days. If you deposit $5, you can get a $10 voucher, and then you can see they're giving some pretty good initial deposit bonuses. 100 gets you 20, 500 gets you 100, 1,000 gets you 200, 25 gets you 5, and then a $10,000 deposit will get you $1,000. Guys, using any of these affiliate links is just a way to support the channel. It's a way to say thank you. You can also just hit the like button, subscribe to the video, share the, subscribe to the channel, share the videos, all that good stuff. I do have 2 KYC exchanges, MEXC and Bybit. Links are in the description if you want to sign up for either one of those. And then lastly, I have NAMI as a partner of the channel, NAMI Trading. And that is this momentum and money flow indicator you see at the bottom of your screen here. And I use it for entry and exit confirmations on my trade. So as we're coming down to a support box, I want to see some bull divs on the chart. And NAMI will even print out the bull divs for you. Right now, we actually do have some bull divs confirming here on the 1 hour chart. If we go to like the 4 hour chart, yeah, you can see bull divs printed, and we have another drive possible, but it's not confirmed yet. So since I've been using NAMI as a confirmations to enter and exit trades, it's got me into the good trades that are more likely to play out, and it's kept me out of the bad trades that are less likely to play out. And it's increased my profit margins pretty much. So if you're interested in purchasing NAMI, I have partnered with them to get you guys 50% off. Just use the affiliate link in the description of the video, and when you're checking out on their website, type in discount code DIVINE50, and you can get 50% off that lifetime subscription to NAMI. All right, let me get back to the chat here. Jobs data, economic data are strong, so no rate cut. Yes. Okay. Well, Machi HK, that does make sense, right? But we know that Warsh does want to cut rates because of Trump, but that doesn't mean it's going to happen, right? And also, they're even talking about doing rate hikes again in October and maybe 2 in 2027, which rate hikes, guys, are bearish for risk on assets like crypto. But more than, let me say this, if you were around in 2021 and 2022, you know that absolutely macroeconomics plays a big factor in what happens in the market. But first and foremost, I look at the technical analysis. Then I look at the macroeconomics. Then we can look at news and stuff like that. But yeah, overall, I would say it doesn't look too good for risk on assets over the next couple of years. But let's see if Bitcoin can break that cycle. Let's see if Bitcoin can buck the trend and continue. Or just, I would like it if the whole crypto market can start to buck the trend. But unfortunately, 90% of the crypto market is garbage. All right. A daily or weekly close below 59K is actually really bad. Yeah, I agree, Mach HK. If we do close below 59K, it is going to be horrible. Now, a daily close, okay, it's bad for a new local low, but a weekly close is what I'm concerned about. If we close a weekly candle below 59K, man, that's going to be, yeah, we're probably going to chop around in this box or lose the box and flip it into resistance. And Mach HK, you said, and now it's closing below the anchored VWAP of the last bear market low. At least it's not on the Coinbase chart. We actually haven't even hit that anchored VWAP yet. So you can see on the Coinbase chart from the bear market low at $15,500-ish, we have not even hit it yet. Today, we came a couple $100 away from hitting it. On Binance, yes, you have. You've closed below it. Let's see. On Bybit USDT perpetuals, let's throw that on there. You're at it right now. You're holding it. Binance, it's way down at 42. Let's see, on MEXC, which I really wouldn't be paying too much attention to MEXCs, but yeah, you haven't hit it yet. So, there was another pitchfork that I wanted to show you guys. Let me see if I can find that. Was that on my Coinbase chart? That's a small one. I actually can delete that one. That's another bearish pitchfork pulled. We can actually look at that. See, once again, guys, look at this. If we look at that secondary bearish pitchfork, it's a smaller time frame pitchfork. We're coming into some macro supports right now. 3 pitchforks that are all converging in this area. I mean, it just looks very nice for a support level, starting to get that support level. Inside, I think this is the big one that I was looking at. So if we go to the weekly time frame, yeah, okay, so let me turn off our multi-cycle pitchfork. This was an inside pitchfork. It's a little bit unconventional, but you can see how nicely it is respected as well. Reject the upper band in 2024, come down to the midline. Break above it, flip it into support, you get a new all-time high. Come down, you hit the band, hold it, you get a new all-time high. You break back inside of it, you bounce from the band, but you reject from the top of it. You dump through the band because you bounced. Your first time you came down, you bounced, but when you bearishly backtested the top and confirmed reentry, you bust straight through it. You bust down to your midline. Then we break up, we bearishly backtest it. You bust through your midline, we bearishly backtest the midline. Man, the next major support level for this is coming in, you know, 53.7 to like $51,000. But look at the bottom of the pitchfork, that inside pitchfork. The bottom of it's going to be aligning very nicely with the Binance anchored VWAP. I don't like that. Man, we really have to hold this. Let's just say we really have to hold this, guys. That was our bullish pitchfork. Looking at our wave 5 up here, that's pretty much used up now. This is the one that I wanted to show you as well. Okay, so this pitchfork is a very, very important pitchfork. It's not conventionally pulled. So generally when you pull a bullish pitchfork, you pull it from a low to a high to a higher low. And that gives you kind of that bullish pitchfork. When you're doing a bearish pitchfork, you pull it from high to low to lower high, and it gives you that bearish pitchfork. Now, this pitchfork, I have to say, it was someone in the community showed me this, and I please forgive me, I don't remember who did, but they pulled it from the the mid-summer 2021 bear market, that little mini bear market in 2021, up to your 69K high, and then down to your 59K low. But look at how well it has been respected as well. Rejection, then you flip it to support. You come down, you even backtest the bottom again. You flip above the midline, you come up to the upper band, and then look at the rejection at the top. Rejection, rejection at the top. You get that little mini range that forms in and around the pitchfork bands. You bust down through it. We're coming down to the midline right now. And that is super, super important. So we have so many high time frame pitchforks coming into this support level that we're coming into now. I mean, guys, to me, it's ridiculous how much support, high time frame support we have in this general area. And this is where you would expect that sort of accumulation to be occurring as well. So I really like what we're seeing here. I like the potential bull divs that we're seeing. I just need that money flow to start looking a little bit better. Okay, let me see. Big Nick, welcome in, man. Imagine 57K is the low, while 70 to 80% of the market expects below 55. Actually, 70 to 80% of the market is expecting into the 40s, I would say. So yeah, that would kind of be a Max Payne scenario, right, Big Nick? Look at the bottom bands of that pitchfork. Yeah. Well, depends on how fast we dump, but yeah, it's going to be, high 30s to mid 30s. Now, let's just talk about Machi HK's theory that he has, his macro bear market theory, which I do have to say is a very, very valid theory, and I think Machi knows what he's talking about here. Let's go to the weekly time frame, and he's pretty much looking at like a WXY correction, right? Like a 3-wave move in a W, 3-wave move in an X, and then he's looking now for a 3-wave move in a Y. And if you take that trend-based Fibonacci extinction, 39K to 32K, right? Or 33K, let's say. But look at where that 1-to-1 would be coming in, right at the next band of the pitchfork, right? So this is where these high time frame levels align up. If we start to close weekly candles below all of our pitchfork zones that we have right now, guys, we have so much pitchfork support pretty much in the general zone that we're at now. You can see wicks past and wicks above and stuff like that, but this general zone of the high to mid 50s has to hold. If it doesn't, you could see a dump all the way down to 42 to 39K. 42 to 39K would be the next big support level. Obviously, we would probably get a nice SFP trade off of that low at 49. And then if we go into our Binance or our Coinbase chart and we look at some of the other high time frame levels that we have below us, I believe we have a weekly at like 50, 55, 54, 900-ish. We have a weekly at 54, 900. We have, man, the monthly levels. Okay, naked monthlies. Yeah, we don't have too much, guys, in this big, if we start to lose 50, 56K, I'd say even 54K, man, it's going to look bad. Yeah, big CME gap too. We can check the CME chart. Now, speaking in terms of that, guys, we're coming down to pretty crucial support on Bitcoin, right? With some daily bear divs and some possible weekly, daily bull divs and possible weekly bull divs. Now, if we're looking at the USDT chart, which is inversely correlated to the crypto market, I like to look at this chart, and we've been looking at a couple things here. Now, for weeks, guys, I've been talking about an impulse breaking out of this channel. Let me just go to the 2-day time frame. We were looking at this channel being a corrective channel, and we were looking for the bounce from the 382 and from the naked weekly and naked daily point of control. I'm going to hide that channel now. Okay. Then we broke above it. We broke above the value area high of the range, and then we started to form another channel, another smaller time frame channel. And this is kind of correlates with Bitcoin's last 2 weeks as well. We were forming this descending channel. And once again, we wanted to see a 3-wave corrective move to backtest the value area high. You backtest the value area high, and now we're starting another impulse up, right? And the overall impulse highs, we wanted to take out, let me just get rid of these. We wanted to take out the double top at 9.5. 9.5%. That is your last bear market highs. They're pretty much equal highs from your last bear market. We are coming up there. We are about to take those out. So with Bitcoin being very, very close to macro support, pretty much at macro support, and the USDT dominance chart being very, very close to grabbing those highs from the last bear market, are we about to see this thing end here? We also had this very, very nice accumulation. If you look at this range in here, right? Accumulation, tap 1, tap 2, tap 3, expansion. So we're in that expansion phase inside of the USDT dominance chart. Very, like, this is some of the nicest accumulation I've ever seen. And now you're expanding. That was our bull market in Bitcoin, pretty much. Now you're seeing the expansion phase. But are we getting a little bit overheated on the expansion phase? Well, let's go to the daily chart. Possible bear divs. Money flow still looks decent. We do have possible but not confirmed bear divs on NAMI. Money flow has been curving out. If we go more importantly to like the weekly chart, this is where also bear divs could be forming here, guys. Actually, this one, yeah, you still have potential for bear divs on NAMI, but man, like it is setting up for a potential big reversal soon on both Bitcoin and USDT. In this case, USDT dumping down and Bitcoin pushing up. It's interesting. It's interesting. I'll say that. Now, another thing, guys, we've been covering on the channel is silver. I did end up buying some silver yesterday at $58. I told you guys that I was going to have limit orders waiting at $58 to buy spot silver. The reason why is we're looking at an impulse here. On the weekly time frame, we're looking at an impulse going all the way back to March of 2020. But we're looking at this being a wave 1, wave 2, clearly a wave 3, and that wave 3 came right up to our 2-to-1 trend-based Fibonacci extinction. If you pull a trend-based Fibonacci extinction from the lows of 1 to the highs of 1 to the lows of 2, we came right up to that target. And now we're in a wave 4 corrective move, and we're in this kind of choppy contracting diagonal. We hit the 382, and also if you look at a channel after the, let me just zoom in onto the daily here. So I talk about this a lot on the channel as well. You get the big aggressive dump to the downside, and then you start to get that choppy overlap, the selling exhaustion kicking in, choppy overlap, and it's usually in a channel, right? Well, we're coming down and we're hitting finally that 382 Fibonacci, which is a wave 4 target. We had a naked monthly point of control there. We had a naked daily point of control there. We had a naked weekly point of control there. We had a daily level there. We had our 382 there. I mean, there's so much in here that we had. And yes, we are technically below it right now. We could wick below it on the weekly to hit the bottom of the channel, which I do think is still possible. Now, because this does look kind of like a contracting diagonal in here, you know, some sort of 1, 2, 3, 4, 5 contracting diagonal, you would then be looking for a 3-wave corrective move up and then another move down. And that's where we could hit the 0.5 at $47, $47.48. And that would be another spot buy opportunity for me. I'm talking long-term with silver, but silver is showing some potential bull divs here. If we start to reclaim 58 and close a daily candle above 58, I'm looking for a decent swing long on it. Until we can reclaim it and close a daily above it, I won't be doing that. But let's say we can reclaim it and close a daily above it, then I'll be zooming in on low time frames. And I'd be looking for a pullback. Right now, we're trying to flip it to resistance, which is not a good thing. But I'll be looking for a pullback, and then I'll be looking for, so if you do something like this, you get above it, you pull back, maybe actually back to it, we can look for the long still there because you might see something really nice play out. Much HK, simple man, just dump it. Yeah, we need a dump song in here too, huh? Actually, we don't need any song because I can't sing. Let's see, daily time frame. Now, there is some other coins that I'm looking at as well. Hype was another one where I talked to you guys, I think it was last week or 2 weeks ago. We were at the top on Hype, and I was looking for that larger flat correction in here. Coming down into $52. But we did hit my internal support level today, yesterday and today. You can see that 59.2. It is that naked weekly point of control, a couple naked daily points of control, a weekly level, and then, of course, your range point of control, which, and we're starting to hold it. We're trying to hold it here. So what I like about this so far is that the move down is looking kind of corrective here. And we can even pull a descending channel. And you can see that we're hitting the bottom of the channel yesterday. If we can start to break above this channel, I think we can see a squeeze up here. We have some pretty nice bull divs on the chart. Bull divs on the chart on the 4-hour. If we go to the 8-hour chart, money flows curving to the upside. Money flows, you have money flow bull divs on NAMI, and even very locally between yesterday and today, 8-hour bull divs. So that 59.2, the SFP of yesterday's low would have been a perfect long on Hype. Daily time frame, money flows trying to curve up again here. And your momentum waves bottomed out yesterday on NAMI. But what, you know, like, so this move down was pretty clearly a 3-wave corrective move down. In here, it looks all green, but if you zoom in, I think there's, let's zoom in a bit. Yeah, you see how this looks like a 3-wave corrective move down. Then you kind of have this 3-wave corrective move here. We could be seeing all of this as an ABC, and then you get a move up to golden pocket before seeing a move down to 52. And that would give you your larger sideways corrective move. So we can pull, actually looking at this, from the highs to the lows. Your golden pocket would be on your value area high. And we could look for a move up to 69.2 to 69.8. And now I would be looking at that as a potential short opportunity up here. You have liquidity right into that level. So what I'll do right now is I will set an alert on that 69.5 SFP. SFP short, and then let's see, to 52. And let's see if we have any naked dailies. Naked daily just below it. Actually, I need to zoom in on the 1-hour because for some reason the 4-hour on TradingView, okay, it's still in the same spot. Yeah, on TradingView on the 4-hour chart, sometimes it screws up those levels of naked dailies. Every other time frame, it will be in the spot it's supposed to be, and on the 4-hour, we'll shift it sometimes. Couldn't tell you why. Wow, look at, after grabbing liquidity today on Hype, we're coming up, if we break this high from yesterday, that's officially a bullish market structure break. And then we could say, hey, maybe Hype is going to move up if we don't reject from the top of the channel, that is, because this SFP right here from yesterday is going to be right into the top of the channel. So we have to watch for, if we break it and then start to drop, I actually would look for a short. I'll set an alert on that right now. It might happen during the stream. If we don't SFP it, I'm going to be looking for a break of this channel and a move up to 69, 69.5, 69.8. What about gold? Let's look at gold here. So this box, actually this green box was from this long trade. So it was already played out. And remember, I took the long at 4,060 or something like that. And I took profit right up at this golden pocket. Let me go to the daily time frame. The first time we came down, we hit that naked monthly point of control. We bounced. We came up to our lower high golden pocket, rejected, grabbed a liquidity. And now we're dumping down. We're starting to lose that box and actually looks like we're flipping it to resistance. So we can get rid of this naked monthly now because it's been hit. We can get rid of the SFP of this low. It's been hit. The next big level on gold is 38,000-ish, 3,886 to about 3,800. But I'm looking at gold. Let's just get rid of these two because we hit those so we can clean up the chart. Yeah, gold is seeing a similar kind of channel down on the daily time frame that silver is. We did see a bounce from this. We can get rid of this. And the big thing, though, is we're losing our midline. So I'll hide this channel for a second. You can see we're losing. That was your pitchfork midline. We rejected from the upper band of the pitchfork up here. Came down to your midline, bounced. We're losing the midline. So in a very, very bearish case scenario, if 3,800 doesn't hold, we could drop all the way down to like 3,300. And once again, guys, think in terms of volume. Like this here, straight move up. If you start to break into it, you're going to see a quick move down through it. And you would see a move into this range. So we would be pulling the volume profile or even looking at naked daily or naked monthly. Let's look at naked weeklies first. There's probably going to be a naked weekly in there. But we're going to be looking at naked weeklies. Unfortunately, it doesn't go back that far. Let's go to naked monthlies. Yeah, naked monthly point of control right there. Now, you do have another naked monthly. That is up at 36.45, but I would be only expecting some sort of bounce to create a lower high before continuing to make a lower low. So we'll mark out those naked monthlies. What I would be watching for, if we don't SFP 3,800, you're probably going to see this thing break down. If you don't see an SFP, which would be a contracting diagonal, 1, 2, 3, 4, 5, and then you could get that move up, right? After a contracting diagonal, which is a motive wave, you expect to move at least to golden pocket, but sometimes in a contracting diagonal, you'll push up to 886 and 786. But with the contracting diagonal, you usually retrace pretty high. If we don't see that and we continue dumping here, I would be looking for a move down to 33.77 because you're probably going to see something like this. We're probably going to break down, not see the SFP, bounce from here, probably back test that midline, and then continue down to 33. And in that case, we would be looking at a double 1-2 impulse, a 1-2, 1-2. You have your big breakdown in a 3. Then this would be a 4, 5, and you might even look for another 4 and another 5, something like that. Hopefully gold doesn't do that. I have the alert set. You can see I have the alert set on this low, 38.86. Yeah, and unfortunately, you see that last major low that was at like about $4,000. This weekly candle wicked it and then got above it, closed above it. But if we close this week's weekly candle below it, you have a high probability of coming down there. Very high probability of coming down there. Actually, I would already say you do. Look at the bear divs that we were seeing on the weekly time frame. So from this high to this high, bear divs on the weekly time frame, and look at your money flow coming out right now. Bear divs, money flow coming out right now. So I would say, man, unfortunately, gold could dump. Now, I'll do this right now. Set an alert on this sucker. No, not that. An alert. Spot buy for me. At 33.77-ish, I will start picking up more gold. And look for swing longs at the same time. It is starting to look nice for a potential SFP with daily bullish divergences at 38.86. So that's another level I'll be looking to long gold. But if and only if we get the SFP. So you want to pierce below it and start to reclaim it. If that happens, I'll look for a long, and I would be looking for a long at first. Let's say we pierce below it, you reclaim it. I would be looking for a long at first to backtest the midline. That would be my first TP on that, is where this backtest is. If we get above it, I would leave 50% of open, because if we get above it, we could then now pull, say maybe this contracting diagonal's done, and you would pull from the highs to wherever those lows are going to be, and you'd be looking at your golden pocket. And it makes sense that you would have some liquidity right into that golden pocket. This is completely theoretical right now because we have not SFP'd. But, you know, you could see a move from 38.86 all the way up to 48.49. Bitcoin short now or long? If I had to go with one, right, like, I'm obviously not shorting towards macro support, but if you're looking at a low time frame scalp, it does look like we're going to make new lows soon, you know, come down and make new lows soon. We're forming this triangle in here, which is a consolidation continuation pattern. Let's see, we might be breaking this a little bit right now. Let me just do something like this. Throw this here. Yeah, it looks like we're starting to break this thing a little bit. Saw a fake out to the downside. You're breaking up. We need to flip VWAP. You don't have any bull divs, but you did print a hidden bull div just now on the 15-minute on that low. So that hidden bull div means we're likely to take out the high just above us at 59.7-ish, let's say. And then, like I said, guys, the reason why I wouldn't be shorting now is because even though I think we could get another low, is because we have multiple drives of bull div. 1, 2, 3. 1, 2, 3. Money flow starting to curve up here. You hit the bottom of the pitchfork. Look at where that hourly candle closed. Right at the bottom of the pitchfork. Just an itty bit wick past it. Paper Beats Rock, thank you for the kind comment, man. Much love to you. And also, thank you for the kind comment yesterday on Jason's live stream as well. I was in there with you. I saw you. I appreciate you, man. Yeah, let me check Solana. We'll check Aave. And Mr. Rekachun, welcome in, man. Solana's at our golden pocket. If we look at our ascending channel, so we were in this ascending channel. Now, I had to admit that when we started to break out of this ascending channel, I was starting to get a little bit bullish because wave 3s will often break out of the ascending channel, backtest it in your wave 4, and then continue in a wave 5. So I was hoping we were going to get an impulse here, but it was just a bit of a failed auction. You dump back inside. You see, we were trying to hold it. What was that, Monday and Tuesday? We lost it yesterday. We bearishly backtested it overnight, and now we're making new lows. But we're at golden pocket support. Oops. We're at golden pocket POC support. You can see in here. Now, technically, we're right, as of right now, we're below the POC and we're trying to break back above it. But I really like down. So this is a fresh naked daily point of control, I believe. Let me just double check that. Yeah, we have a fresh naked daily point of control at 61.8, which is right near your value area low. But look at our green box. And the reason why I left this green box on the chart here, we bounced originally on that low from a daily level at $61. But we had below us, I believe it's a naked monthly point of control or a naked weekly point of control. It's a naked monthly at 58.08. And then I believe maybe I just suck at pulling this box. I did it on high time frame. So that was the box I was looking at. And I would really like to hit that naked monthly. Just like with Bitcoin, we have a naked monthly just below us. And then as well, we're looking at this. Look at this move down. This clearly looks impulsive here. From 98, from taking your range highs out. We took out our range highs right into the pitchfork. I'm going to hide this channel now because it's kind of irrelevant. So we had a range in here. It was at the bottom of our pitchfork. We bounced from the bottom of the pitchfork. By the way, I longed this. This was a naked daily point of control. We come up to 98, took some profit at 98. Actually, I took some at the POC, then I took the rest at 98. And you guys can go back in the Telegram and see that I was saying that real time. But I didn't short this, and that's what I was really upset about. I should have shorted that. I mean, that was such a perfect trade right there. Are we looking at some sort of A, B, C, or some sort of wave 1 to the downside, some sort of flat here in a wave 2 before seeing a C to the downside? And that would, then you would be expecting, you know, low 40s to mid 30s-ish. I really do think because this overall move up was a 3-wave move to the upside, it is very highly likely we take out our low. Very highly likely. Bitcoin's already ahead. Bitcoin had its 3-wave move up, and just today it came down and took out its low. Well, yesterday, actually. But today as well. Money flow looks pretty bearish here. You printed a hidden bear div. Actually, you printed a hidden bear div on this high, meaning that you were expecting to take out the low. We just did that today. The main range you want to pay attention to is this sideways range in here. After the impulse finishes, you look at your sideways corrective move. We're back inside the volume profile. If we close the daily candle today below the POC, which is 66.76, then we expect to move down to value area low. But because value area low is so close to the liquidity, I would suspect that we're going to come down and at least wick the liquidity. We might not hit the naked monthly right away. Let's pull this. Let's go for a flat target. Yeah, I mean, that we could see a move down to 54, but I would honestly be looking at that 58 naked monthly. On the 1-hour chart, you do have some bull divs that were created today. You can see that bull divs created today. We also have NAMI with some bull divs on the 1-hour. Unfortunately for me, because we wicked so far 2 days in a row past the golden pocket. Look at, if we pull that golden pocket again from low to high, once again, that's also a 3-wave corrective move. So it's more likely than not we take out the low. But if we look at our golden pocket, yes, the candle bodies both yesterday and today are trying to hold at this golden pocket. But I do not like these wicks below. And even if we look at the 786 with it, you haven't hit the 786 yet. If we get above the POC, you might be able to see a move up to 70.9 to hit the value area high again and reject. Man, I just don't like this choppiness in here that we're seeing, because if this was a wave 1, wave 2, your wave 3, you don't like this choppy overlap, especially yesterday and today in a wave 3. And it kind of messes up the Elliott wave count for an impulse to the downside. So could we see this extend like a larger WXY, right? Just like Bitcoin, W, X, and then you get that 3-wave move up in a Y. But because you hit the 0. Let's see if we hit the 0.7. If you hit the 0.7, yes, we have. Now you have a higher likelihood of your Y wave. It doesn't have to take out the highs of W. I think when I set this alert, I think I put a small spot buy order in on Solana. And I'm okay, even if it drops to 30, I'm okay holding that, because I think Solana is one of the coins long term that is going to have real use case still. They're also building a future perpetuals marketplace like Hyperliquid. They're building one, and I think Solana is going to be able to compete there. So long term, I'm okay scooping Solana up when it's 50% or more off its all-time high. Let's see here. What am I looking for? Yeah, we're like, what, almost 80% off the all-time high. So to me, that's acceptable to start buying some spot. We might drop down to $31 to $28. Because if we don't hold this box, there is really nothing from keeping us from coming down here. Right? And let's see. 1, 2. This is starting to look a lot like a 3 in here, guys. No, see that $56, guys. That's if this is a flat in here as well to end it, 56 to 58 is really a good support level. And it would be your kind of 3-wave corrective move on high time frames, and then you would want to see this. You would want to see it start with an impulse. So from like this 58 to 56, you would want to see a small impulse. And honestly, I would want to get back inside this pitchfork. You are seeing potential weekly bull divs as well. Actually, look at markets. Nami. Nami looks super nice. 1, 2, 3, 4, almost 5 drives. And you could have money flow weekly bull divs on Solana. So to me, Solana's looking super, super nice on high time frames for a real bounce to the upside. Lower time frame, I would like to hit that 58 first. So yes, new local lows I expect. The main reason is because this first move up a couple weeks ago is looking like a 3-wave corrective move. Because of that, I would like to take out this low, but when we do, I'm going to be looking for some swing long opportunities. And you guys can see I have an alert set on the Naked Monthly. What I'll do right now as well is I will set an alert on the SFP of this low at 60.11. Because if we get that nice SFP, I will take it. All right. Let's look at Aave. Wow, Aave's pushing. It got back inside the channel, held it as support, and we're pushing up to the midline right now, which is also a POC. This is actually very interesting. Let me go to the... All right, so let's go to the daily here. Aave had this little, and I'm sorry for this chart. Let me just clean this up. So we have a couple different ranges. This was our bear market accumulation in here. This was our accumulation range, and that's why I have a volume profile here. And then, of course, we saw the expansion, right? And after expansion ends, we're getting what could be a 3-wave corrective move, but I don't like how far it's going. If we reject the POC right now, which is also your channel midline, I'm going to expect new lows. I would expect this wave 3 to continue pretty much. Instead of it being a C, I would expect it to be a 3. So let's do something here. Let me just zoom out to the weekly. For now, we'll hide this parallel channel because it's in the way. Yeah, and you can see, man. This is starting to look, because we've surpassed the 1.236. This is starting to look like a wave 1, wave 2, 3. Now this 3, if we reject right now this POC, we might continue down to $50. Oh yeah. I mean, that would actually be really, really nice because you can see your lows are all right around $50, but I would probably expect us to come down and grab at least this low. $47. And I think this guy in here too is right at it. Those two are probably going to be taken together, to be honest. All right, that was a weekly level that got busted through. We can delete that. So yeah, pretty much this was your accumulation range in the bear market. We're at the value area low of the range. We're starting to see a nice bounce from the value area low. You do have some pretty slight but wonky bull divs on NAMI, or excuse me, Market Cipher. NAMI is not confirming bull divs anymore. You can see here, no bull divs there. But in terms of our parallel channel that we were seeing, we were looking at this kind of grind down in here from this crash in October. Oops. From the crash in October, we were looking at a parallel channel. Right? And so let's throw that on. Oh, actually, I'm sorry. That was a different one. We were looking at this parallel channel in here. We broke it down. We were able to get back in it, flip it into support, and come up to the midline. I want to also look at, yeah, I think that is a valid volume profile because after this crash, you start going sideways in here. So first we can pull that. Yeah, it's going to be the value area low where we're rejecting from right now. If you get above it, you probably are going to come to the top of the channel and we'll pull from the channel highs to our lows. Just golden pocket. Yeah, I would definitely be watching that golden pocket because it's more than a 30% dump. You need to put it on log scale. And if we can get back inside this volume profile, you can see we're bearishly back testing it right now, which is our accumulation range POC and the value area low of our current range that we broke down from a couple weeks ago. If we reject here, I would expect probably to continue down, or at least to continue down to retest the channel. But if you can break above it, I would expect a move up towards that golden pocket. Man, it's almost like this little range in here is what we should be paying attention to. Because you kind of see, like, this coin trades pretty weird. Sideways range, kind of dump down, form a new sideways range, dump down. So it's kind of staircasing down in ranges. But yeah, that $100 mark, almost on the dot. Another key psychological level as well. Let's see if we can't get up there. If we reject where we're at right now, it's not going to look good. But here's what I will say. Here's what I will say on the 4-hour time frame. From our lows, we do have what looks like a pretty clear impulsive structure. Wave 1, wave 2, 3, 4, 5, right? You have that 5-wave move up. So even if you do reject from here, there is still a possibility of seeing a corrective move down to golden pocket. Let me just measure this real quick. Okay, that's only a 50% move, so this needs to be not on log scale. Man, that would be super nice too. Okay, so we have some nice confluence here. You can see that if we reject from here, we would be looking for that kind of 3-wave corrective move down to the golden pocket. You would take the liquidity from these lows right into that golden pocket. And then you could see a bounce continue. We could see this. Boom, boom, up to the top of the channel. So for me personally, the only trades I'd be interested in on this is if we SFP this low, I'll set an alert. Into golden pocket. And then I would be looking for a short near 100 or at 100, near to at $100. I'll leave that on there. Okay, let me read the chat. Does it look like money is rotating in on Aave? Let's see here. Let's go to the weekly time frame. Let's see how money flow looks. I mean, money flow is starting to round out. You can see here on NAMI as well. You have those bull divs on money flow on the weekly. So yeah, I would say it's starting to rotate in. You have to get above this $85 mark. You really want to see a move above 85. And if we lose our local golden pocket at 69, there is a real chance of going down to 50. Okay, Link. Yes, we can look at Link. We did a hype earlier. I will look at ZEC too, but let's look at Chainlink. Now, I've got to leave shortly here, guys, so I'll go over these a little bit quicker. Long story short with Chainlink is we're coming down to our like 5-year long range. You can see this goes back to August of 2020, so almost 6 years long. We're at your POC right now. Now, what I wanted to see earlier is an SFP of this low, because remember that low back in February or January, at the end of January, it front ran our POC. We hit it Monday, June 1st, and then today we SFP'd that low. Actually, we haven't SFP'd it yet, so I'm now looking for an SFP. Let's delete that, and then let's re-add it. So I'm looking for an SFP of that low at $7, 7001. This one, delete that. But you're at your macro POC, and it's also going to be around that accumulation. This was accumulation of the last bear market. You can see accumulation, expansion. And look how nice this expansion was, guys. 1, 2, 3, 4, 5. You started it with an impulse. This probably retraces to the golden pocket. Make sure that's on log scale. Yeah, retrace to the golden pocket in a very nice 3-wave corrective move. Then you get another impulse to make a new high. Unfortunately, this is left shoulder, head, right shoulder, or a distribution, tap 1, tap 2, tap 3. Here's accumulation. Here's your expansion. Here's the back test of the accumulation zone. After backtesting and holding your highs of the accumulation zone, you get continued expansion. That makes your tap 2 there. And then you get your tap 3 here. And we're at the bottom now. We're back towards our accumulation. So if you're macro bullish on Chainlink, right now is the point of control. You're at the point of control of the last almost 6 years. This is also that point of control of this accumulation range. So it's a good spot buy zone for long term, in my opinion, not financial advice. Okay. I like this zone. Now, if we lose it, I would be looking for the accumulation range value area low, which is what I have marked out there. You can pull this accumulation range. You can see the value area low is at 610. And if it gets down to the undervalued in the last bear market, that is definitely a buy opportunity for me. But yeah, I mean, and then let's look at this. So you see how this expansion starts with an impulse, 1, 2, 3, 4, 5. You can also look for this distribution to have an impulse down, right? So if we're looking at the trend-based Fibonacci extinction from the highs to the lows, to those lower highs, actually we'd be looking at that based off log scale. Okay. Yeah, gosh, guys, it is such a perfect zone. And look at, that's right where you're, if you're looking at, well, this would be some sort of contracting diagonal that would end around there. You have this contracting diagonal that would be ending. That's your motive wave down. But we are close right now, very, very close to your 1.236 trend-based Fibonacci extinction, your POC. Weekly has potential bull divs, but money flow doesn't look good. Let's go to the 2-day chart. Yeah, you have potential bull divs here and potential bull divs here. But because the other day, when was that? On Sunday, June 14th, you printed a hidden bear div, you're likely to take out the low that's just below us that we haven't taken out yet. Chainlink did not take out that low today. You can see it is still below us. I don't know why TradingView does that. And you can see that your 1.236 has not been hit by the smallest of margins, 6.982. But yeah, I think you are likely to take out that low because, once again, just like Solana, just like Bitcoin, this is a 3-wave corrective move. We could be looking for another 3-wave corrective move in a flat, right? The same sort of flat, which also, it could be that like accumulation, right? W, X, Y, and then you get a dump maybe to golden pocket. That creates that left shoulder, head, right shoulder, accumulation at the POC. I think personally, I might buy some more Chainlink at $7. Autistic yell, Chainlink. Okay, ZEC real quick. I got to do that. ZEC USD and Montez D on hype. We're at the support of 79.2. It's a point of control support. It does look pretty nice. Man, this does 1, 2, 3, 4, 5. So this could be impulsive to the upside here. Now, because of that, you can pull a golden pocket from the low to the high, and you would see a potential support coming in around 336 to 327, which also happens to be some liquidity of your wave too. I'll set an alert there. If we get the SFP long into the golden pocket, anytime you see a liquidity grab into a golden pocket, pay attention to it. So I'll set that there. If we get that, I'll let you guys know in the Telegram. The big thing I don't like, so I was looking at this potentially being an impulse, a 1-2, 1-2. You had your big third wave, but our if you're saying this is a fourth wave, we've hit in the golden pocket, and we've also had overlap between the lows here and the highs here. So that invalidates it, meaning that this is probably a corrective move that ended with an extremely sharp C wave to the downside. This looks a little bit impulsive. 1, 2, 3, 4, 5. So there is a probability, a decent probability, that you make a higher low and then continue up here. I will say this, if you break this golden pocket, you are probably going to come down to 245. And you're going to grab this liquidity right into your POC and right into your 786. Now, in the meantime, on ZEC, we could look at this little you're starting to hit the 1-to-1 and the 1.236. We might see a move down in the next couple of days to hit that naked weekly and the 1.236 between 379 and 375. That is also probably going to be your 0.5. Okay, a little bit lower. Yeah, I would say this is also a decent zone of support just below us. Right in here. So those are my two zones I would be interested in taking trades from. Is the SFP into the golden pocket, and then 379 to about, what is that, 368. But you are at the 1-to-1 now. Remember, if this is an impulse, you want to see a 3-wave corrective move. Now, if this is an impulse, it has to be some sort of expanding diagonal. Your corrective move often does come to the golden pocket. So we could be looking at, instead of an A, B, C to the 1-to-1, you see in an expanded correction, it goes to the 1.618, which is probably going to be close to your golden pocket. Okay, XLM. Man, we're breaking. So we rejected a lower high golden pocket. 1, 2, 3, 4, 5. You have a 5-wave move down here. You have that 3-wave move up here to reject from a lower high golden pocket. And this clearly looks impulsive to the downside. You did not SFP the lows. You wanted to SFP those lows. Because we didn't, you could move down to the 1-to-1, which is at 15 cents. You are coming up to backtest your prior range. This is like the accumulation range, right? This is our accumulation range. You could come back to backtest the value area high, 17 cents. But honestly, I would say that you're more likely to, let's go to our 786. Let's turn that on log scale. Yeah, I would say you're more likely to come down 16.5 to 16 cents, where your POC is and your 786 is. Man, that was a nice pump and dump, right? Wasn't that because Wall Street was supposed to be getting an XLM? Like that, what a joke that was. But if you start to fall back inside this volume profile, so if you don't hold 17.1, then you're very likely to come to the POC. And if the POC doesn't hold, you're coming to the 1-to-1, which would be your next zone, by the way, because it's also, if this is a larger zigzag correction that's going to make a higher low than this low, your 1-to-1 would also be at your value area low. And if you fall back into this range and you lose the POC, you expect to come to value area low. So you have three main levels to watch. So this is this support at the 1-to-1 in the value area low. You have the value area high, and then, but I would say the most important zone is kind of this POC zone. And then if you break below that, you would come down to the 1.236, grabbing the liquidity into the bottom of the pitchfork. I will set an alert at this POC. And I will set an alert at the value area high. And I will try to let you guys know in the Telegram. Okay, let me check Bitcoin real quickly. What is she doing? Nothing? Yeah. I mean, guys, we're consolidating after a dump today. But I would say because this move up now was a confirmed three-wave move up, and it's confirmed because we already took out the lows of that move. Well, yeah, we took out the lows of that move. So we're looking for potentially a 1, 2, 3, 4, 5. And this 4 is kind of a triangle that's occurring right now. So I'm looking for one more low. Very, very locally on low time frame. 57,900. Thank you, Time Attack. Yeah, guys, please do hit the like button on your way out. Let me check near really quickly, and then I've got to get going after we check near, guys. Okay, so near actually did see an SFP of the lows. Yes, was that yesterday? No, that was earlier today. We saw an SFP the lows, but it didn't really play out. We're dumping down below it again. I would be looking to come down to 176.1 to around 169. You can see I've had that box laid out on the chart. Get rid of that. And by the way, on near protocol, we were looking for this to end at 308. I took profit exactly at 308. And if you guys go back to that day, you can see that I'm not lying. Go back and watch the stream or the video on Wednesday and the live stream on Thursday. I was marking that out ahead of time because it was our previous range, value area high, and a weekly level. It was also the fifth wave of an impulse, 1, 2, 3, 4, 5. Now, after an impulse finishes, you're looking for a move. Your lowest you would go is to this golden pocket at 138. And it's also going to be your 1.236. So you'd be looking for, after the impulse finishes, a corrective move down to the 1-to-1 or a corrective move down to the 1.236. So the ultimate support level, like the spot buy support level for me on near, is this box right here. Range POC, 1.236, log golden pocket pulled from the lows at 85 to the highs at 308. That's your main zone. The next zone I would be looking at, your 1-to-1 at a naked daily. But coming up right now, like in the next day or two, you have a golden pocket pulled from the lows of 3, these lows here, all the way up to the highs. 176 to 171. And you can see actually 176 is where the golden pocket starts, but I would actually be looking at the naked daily at 174.5 is probably, you'd want to wick into that golden pocket to hit that naked daily. But yeah, you're coming up to some support. I would just be concerned that you're going to see a small bounce from there. So something like this, a 1, 2, 3, 4, and then one more move down. But I will set an alert on that naked daily point of control because we might be able to get at least a decent scalp long opportunity from it. This is obviously going to be toast now. Yeah, we might get something like this where we bounce from this golden pocket just to come up and back test the value area low before continuing down. But that is still, depending on how you get this move, oops, a long opportunity from golden pocket, and then you bring it up to that value area low. That's still a 5 to 1 risk to reward ratio trade. That's still a good trade, guys. So if we long around 174, we want to take profit, at least partials at 195.5, 195.6. I'll be watching for that. What exchange do I buy spot? I don't know if I'm comfortable saying that because there's a lot of scammers that are listening that have always tried to scam me. But let's just say it's a safe exchange. Probably one. Yeah, never mind. Yeah. A good exchange. Look at that golden pocket value area high rejection there, guys. Perfect. Then you lost the POC, back tested it, rejected. All right, guys, I do got to get going. Thank you so much. Please do hit the like button on your way out. And I will be live streaming tomorrow at 3 p.m. Eastern Standard Time. Please come join me. If you're not in the Telegram, I will be posting updates in the Telegram in the meantime. So join the Telegram, guys. All you have to do is sign up with BYDFI using my affiliate link in the description. Deposit a minimum deposit of $100 or more. That is your money. You're not paying it to me. You're not paying it to BYDFI. And then once you've done that, click the Telegram link. And in that Telegram channel, type in /verify in your user ID. And that'll get you into the Telegram. Thank you guys all so much. I appreciate your kindness, support. And I will see you tomorrow.